There remain early signs of continued economic weakness, with US consumer confidence coming in quite a bit weaker. The market had expected a rebound. Instead, it continued to fall to levels not seen since August last year. The debt ceiling issue is raising its ugly head again. We reiterate that the debt ceiling serves no function beyond politics and should be abolished. It has never constrained politicians from raising spending or cutting taxes because it merely authorises the borrowing required to finance spending programs and tax policy which Congress has already agreed. In the real world, however, House Republicans see the debt ceiling as a tool to extract concessions and spending cuts from Democrats against the threat of a default. Our base case view in these situations is always the same. A deal will be done, but the nature of the deal is unknowable, and it will be done at the very last minute. The markets are clearly spooked, though. The one-year Treasury CDS spread is its highest since records began at 157 basis points, almost double that of any prior peak. We believe this is misguided. Meanwhile, European data and sentiment looks more robust than the US, while the ECB is discussing the potential for a 50 basis point rate hike rather than a 25 basis point one. There are 14 hawks and 8 doves, while 4 remain neutral. This implies the USD could continue its decline, particularly when looking at the expected peak in interest rates. It is May the 3rd for the US, while it is October for the ECB. So the ECB is likely to continue to hike rates long after the US has stopped. Expectations of a weaker USD are likely to be supportive for Bitcoin prices. Why the Bitcoin price rebound? There are several things at play. The sell-off, likely prompted by the gradual expectation of a May rate hike in the US, presented a buying opportunity for some. The fall in investor confidence for First Republic Bank's viability, as demonstrated by its 49% decline in its share price over the last 2 days, brings into question the robustness of the Fed's bank term funding program and is likely to have also been part of the reason for Bitcoin's price rebound. For the first time since the Chapeller upgrade on Ethereum, the queue to stake Ethereum is larger than the queue to withdraw from staking, according to Beacon Chain website data. Initially, the queue was 10-1 in favour of withdrawals, so this change implies growing confidence amongst investors as they are increasingly depositing more than they are withdrawing. It is also likely that Ether can now be withdrawn from staking. Investors can use put options to fully hedge an existing staked long ETH position. This acts as a pseudo-delta neutral hedge, so the investor will not gain or lose if the price of ETH moves in either direction while maintaining exposure to the yield. For whatever reasons, it helps support the Ethereum validator network, which is exactly what the Ethereum Foundation wanted. Follow us for more weekly insights.